Слышь, начальник, не крыли.
Go and get the grain, man, you know a nigga flame. Cartier frames, I can see a nigga brain. Cartier bracelet, they matching with a chain. Dirt up on my name, and you should be shamed. Knocking for boots when I'm throwing up game. Diamonds too loose when it's watching this plane. My dog got the juice and no smoking propane. I'm gunning, I'm run to the money, Hussein. Who talking, who telling, who saying? I'm selling prescription cocaine. She on my pimpin', my cane. I'm Michael, I'm not no Jermaine. Jealousy, that you gon' eat your heart out. This an AR start off, we'll slay your squad out. This a beach we brought up. This a feast we ball out. I'll eat your heart out. I'll pull your card out. Hating that niggas, I got it out the mud. Hanging in the family, be on blood. Stripping 12 to the DA and the judge. Never been a dog, never been a scrub. 5 Glock 9, oh, you want the judge. Better than who must be high on them drugs. Putting in the mansion with the bubbles in the tub. Heard you wanna cover, you up with the stud. Hey, yes, don't try me. And a lamb, I be damn if a nigga try me. Get a hand with the fam and a nigga gotta eat. Shot a 9 in my bus, I'm a trick for a treat. Before I bought the lamb, I was riding in the Jeep. 500 horses with a stick on the seat. And he'll fold when it's heat. Go and get the call for the dough, boy, you weak.
Watch and I'll show you the story.
All right, guys. What is Gucci gang? What is good? What is good, man? I hope you guys are having a blessed day. It is Tuesday. Know what I mean? Tuesday, July 15th, 2025. You guys ready to learn something today or what? Are you ready to learn something or what? What is the deal, Jap? What's the deal? We'll talk about a few things today. Well, yeah, we're already on gold, so we'll take a brief look, but yeah, it's good for like a lesson, but I didn't trade gold today. Ugh. Not always a fan. Not always a fan, big dog. Was good. Victor, Willow, Eminem, Jonas, Pop, Anton, Roger, Ram. Chat is open today. Was good. Big James, Pop, Sean, Marius, Willow, Roger, Eric, Julius, Tordy, Jonas has a pen and paper ready to burn. Give it to me. I'm gonna give it to you, dog. Like X. X gonna give it to you. Right? Or whatever he said. What's good? Harmon, Flo, Prosper, Akinola, fresh energy drink on deck, right? Not sponsored. Not paid sponsorship, but we got the Harvest Grape Rainstorm ready to go. All right. Ooh, just tastes like you're drinking grapes, man. It's so good. And I gotta wake up. But John, it's like 12 p.m. And? And? No, I didn't sleep well last night. And I got up early this morning, so I'm cooked right now. So I need a little bit of pick me up. Right? Okay. So yeah, we can transition into that. We'll start with gold. What can you before we get into it, what can you tell me about the things we talked about yesterday? We discussed, I don't know, like a dozen things yesterday. What were some of those ideas? You can type them into the chat. What were some of those ideas from yesterday? I'll give you guys a minute to put that into the chat. What were some things we discussed yesterday? Monday the 14th. What was it? Oh, that's a good point, Mar. I actually totally forgot about that. Believe it or not, I gotta write that down. Maria said traders being impatient, I think is the right word there. I'm trying to get better at English. Traders being impatient coming onto the charts on Monday. Marius, that was a wonderful point. Thank you. I mean, I do have a bullet point today on patience, but yesterday we did talk about the impatience of traders on Monday, equities specifically. Right? Impatience on Monday's AM session. Yes, sir. So one person paid attention yesterday. The trader's recognition assignment. You'll have to refresh my memory on that one. What else, chat? Come on, man. Some of y'all know. Some of y'all know. What are some of the things? We talked about concepts. Which ones? We talked about certain ideas in price delivery, right? When nothing stands in the way. Come on, chat. Y'all know what the fuck is going on. Y'all just like to see me talk shit, huh? You're just like, nah, yeah, John, we got the notes, but we just want to hear you talk shit. We just want to hear your shenanigans. It is possible to long with equal lows, Torty. Yes, that was one of them. Okay, we didn't discuss Sunday's gap yesterday, not really, but I'm going to mark this up just for illustration purposes. We are on gold, by the way, gold 15 minute, and this is just the front contract. It's just GC1. Because this proves a really good point that I want to talk about. And that'll be the first idea. When nothing stands in the way. You remember ES? You remember NQ? I think we spent the majority of yesterday on NQ, right? We had what typically manipulates, mitigates. I was waiting for that. None of you put it in the chat. You're all fired. You're all fired. None of you are hired today. You're all jobless. Rules can be bent under some conditions. All right, that's probably not the verbiage. That's probably not the best verbiage, but that's my fault because I did tell you that. But yes, there's beginner rules, and then there's like the intermediate and advanced rules, right? Because some of the beginner rules are designed to protect you. Don't long with equal lows, don't short with equal highs. That is a rule to protect beginner traders. As intermediate and even advanced traders, now you know when you can long with equal lows and when you can short with equal highs or low resistance highs. Yes. So there is different rules for your stages of development, basically. And yes, thank you, Roger. Whatever manipulates typically mitigates. Roger, I didn't want to get into this, but in 12 Rules for Life, right, Jordan Peterson, he talks about how you should choose your words carefully. You have to pick your words carefully, right? Language matters. What was that one book, The Four Agreements by Don Miguel Ruiz, I think? If I remember that correctly. The Four Agreements, right? Your speech matters. So the reason, Roger, I want to point that out, because if you take notes and you say whatever manipulates will mitigate, what you're doing is you're restricting the market to where it has to do that, or that it's going to do that 100% of the time. And that's why I choose the word typically, because it can manipulate and just go to shit. It doesn't have to, form a mitigation to allow what we talked about yesterday. It doesn't have to do that. So that's why I have specific verbiage, Roger. What manipulates typically mitigates. So there's that room for margin of error. There's room for being wrong, right? And we don't want to be that rigid. We want to have rules, but we don't want to be that rigid in our analysis of price. Okay? But thank you for the comment. Okay? Continuing on this idea. All right, so if you're taking notes, right, continuing on this idea that price, right, will start to run liquidity when there's nothing that's standing in the way. And again, you can look at every market maker buy model. You can look at every market maker sell model. You can look at pretty much any price run, like say this run right here, for example. And that's why I have it on a chart, by the way. What I'm talking about is the run after that candle. So I'm talking about this right here. Okay. So we're going to get to I don't know where I was going with that. After this, we're going to talk about this move here. Okay. Because the idea, just like yesterday, is if there's no opposing concept, if there's no sort of analysis that proves otherwise, let's say if gold was a bearish market this morning, if there's nothing that's going to stop it, then that's how you trust that it's going to run those lows. Okay? And this is why Sunday's gap is also important. When we and again, this is hindsight. I did not look at gold this morning. I didn't really bother with it. It's for illustration purposes. I'm here to teach you some shit. Okay, I don't trade every day. You know what I mean? So there you have it. But take a look. If we have Sunday's gap on our chart, and we understand that gaps are what? They can be, price can be sensitive to gaps. Above gaps can be considered premium. Below gaps can be considered discount. It's real simple. So with Sunday's gap, we did trade higher on Sunday. We traded back into the gap, even outside of it a little bit. No, not a problem. We rallied up here, and then we shit the bed on Monday morning. Okay, fine. And this is what pisses me off too about Twitter, because I did have to correct someone yesterday. They said, oh, a gap is an imbalance. No, that's wrong. Dude got like 100 likes on his shit. I'm like, that's fucking wrong. A gap is not an imbalance. Okay, so matter of fact, let's pause here before we continue. Okay, does anybody know the difference between a gap and an imbalance? It ain't the same shit. What is the difference between a gap and an imbalance? Or a fair value gap, as some people say. I don't care what you call it. But for the sake of keeping things simple and not overcomplicating things, imbalance. What is a gap? What is an imbalance? You think, oh, that's the same shit. If it's the same shit, why does it have two different names then? You think a red light is a green light? You think that shit means the same thing? Yeah, good luck. Good luck when you get to the red light or the intersection. You're fucked. It's not the same. Jonah says the imbalance is created in one way. That's part of it, yes. Eminem said lack of price movement on both sides. That's what a gap is. Correct. You need 2 candles for a gap and then 3 candles for an imbalance. So personally, I've never thought of it that way. But I guess in a technical sense, you're correct. That's an interesting observation. I never really thought about it like that. Okay. Here's the simplicity. The difference between a gap and an imbalance. A gap has neither buy side nor sell side price delivery. It lacks both. It lacks both. An imbalance lacks one of the two. Okay? Like, or maybe it was the 1 hour I was looking at earlier. Unless they changed the fucking price on me. Maybe that was NQ I was looking at. Okay, whatever. I'll give you a... We really don't have any imbalances up there on this time frame. I could have sworn that was different. All right, whatever. Here's a really good illustration right here. That's a gap. This is an imbalance. If you include that gap, though, you can put them together. So that may not be the best one. Okay, fine. This is a shitty one, but we'll take it. That is an imbalance, right? It was one-sided. Then we got sell-side price delivery. Then we were able to trade higher. Okay? That is one-sided. Okay? Or say like this right here. That is sell-side price delivery that lacks buy-side. Now we have buy-side. Right? Versus a gap that has neither one. Why is that good to know? Well, number one, you got to know what the fuck you're doing. You got to know what you're talking about. That's why you shouldn't tweet if you don't. Okay? I've said this for years, right? Is that true or not? Well, look, we have a gap, no buy side, no sell side. Price comes down, right? Even though we do have up movement here, yes, but generally speaking, we trade lower. So we got sell side price delivery. Okay? We traded back into it multiple times, right? Giving it what? Buy side price delivery. So once we got our sell side, once we got our buy side, what do you notice? What happened after that? We had some short-term highs, wrecked. This down candle here, right, is the lowest one. So I guess it really depends on whether you want to look at this high or this one. We'll keep it simple. I'll use this one. High, low, higher high that takes these previous highs, and look how it did it. It like closed off of it very aggressively. Stabbed it, couldn't do it. Stabbed it, traded lower, right? So what does this become here? A mitigation. Am I losing you yet? Don't let me lose you, chat. We're still on this idea because we're about to come in. We're about to trade, or we're about to go over the idea of when nothing stands in the way. Okay, when you take a look at what has taken place, right? You have a low, and then you have a higher low. So how do we view that? We view that as low resistant lows, right? Drop a like on the stream. We got 17. We got almost 50 people on here. Come on. You guys are learning some stuff. The least you could do is drop a like, all right? When you have two lows, when you have two of them or more, but specifically when you have two, if the low on the right is higher, It's better if it's slightly higher. When you have that, that's low resistant lows. That's an amazing target. That's a beautiful target and below. Okay? How did we make these highs? Well, this high here and this one over here, those together, that can be seen as a potential upside target. That's possible, right? Because we have that high and the high on the right is slightly lower. So that could be low resistant highs. So when we trade inside of the range, right? And this has kind of been the theme the last few weeks or months or so, trading within a range. Not at price extremes, like the Y-Slime model or the manipulation phase of a buy model or sell model, right? Those are price extremes. What I'm talking about here is trading within a range, okay? Price could trade above the gap, sure. And then that would give me enough, I guess, evidence or proof that, okay, we may trade back into it and then go for the highs. But what do you see instead? What do you see instead? Again, those highs cleared, we traded off of it, and then we dumped. So right about here, or even here, or maybe even like that candle here, we start basically closing below the mitigation, right? So now that we have a little bit more information to work with, and this is where patience comes in. Now that we have this, what has the market now done? It's tipped its hand to us, right? If we were playing poker with each other, right? We were all at a table, like 5 of us playing poker. We wouldn't show each other our cards. We wouldn't do that, right? Because you would be at an extreme advantage if you knew the hand that I had. The market, though, you got to understand, the market will tip its hand to you. It may show you a card, or maybe both of its cards. And then you go, okay, now we have stacked probabilities. And that's what happens right here. Okay? So let's back up. When we have this to me, when we're inside of a gap, we've got low resistant lows. We've got maybe some low resistant highs. We could be like in the upper half. This might be in a premium, sure. But this is within 2 different price targets. So that to me is low probability. Could it go higher? Could it go lower? We can justify both sides. That might be 50-50. I don't want to trade 50-50. Okay? So when we have patience, we allow the market to start printing some candles here. Now we get some context. We go, okay, we're back into Sunday's gap, but wait a minute, we've already given it sell side delivery. We went below it, now we're trading up into it, giving buy side delivery. And now, if it can't get above Sunday's gap, remember how I talked to you about gaps, especially this year. Remember earlier this year on the indices, I was saying, hey, as soon as we get above this gap, we're going to trade back into it and then fucking moon. And that's exactly what we did, right? Not to brag or anything, because I'm still long stock, all right? But that's how gaps work. So if we trade into it and off of it, okay, in the short term, that could be bullish, whatever. Then we traded through it. Okay, now we're back into it. But from here, can we get above it to go for the highs? We can't. Price isn't doing that. So what happens instead? We trade lower. So right in here, and that's why I pointed out some of these down candles. This is a 15-minute time frame. You know, if you check the charts every so often, or maybe put an alert at the low or some shit, that would work too. Now that we have this, now the market has tipped its hand. Now it has shown you, okay, I'm not going to the highs. That high right here was cleared right there to go lower. These highs right here were cleared, and now we're going lower. So now it is trading in the direction of its intended target, which is now the lows. Okay? So now we have a one-sided market. But here's my biggest point. Again, back to the idea of when nothing stands in the way. Okay? Can you frame something bullish here? Is there anything in here that screams bullish to you? Oh, well, there's an imbalance right here that already got traded into and we went higher. So that ain't going to be bullish. Oh, well, what about this random down candle before the up move, right? Oh, that's an order block. That's a fucking whatever, institutional candle, or that's, you know, the whatever people call it, okay? That's what that, fuck no. No, absolutely not. Not this one down here either. That down candle's already been traded into to go higher. Do we have anything in there that screams bullish? Should it stop at that low? Should it sweep this low and then trade higher? Why would it do that? Should it sweep that low and trade higher? Why would it do that? We've got higher time frame. We've got, like, I guess when you zoom out a little bit, broader perspective, you've got these lows here. There's nothing that's standing in the way. Nothing. Right? Now, okay, price is basically like a train. And it's coming full speed. Okay, what happens when like a cow or some shit walks onto the train track and the train is coming? Or y'all ever seen those videos where an 18-wheeler for whatever reason stops on the train tracks and then just gets stuck? What happens when that train comes by? That truck ain't a truck no more. You know what I'm saying? That train is coming through and everything is being destroyed. Everything. Yeah, Willow cheeseburgers. That's fucked. But you're not wrong. I asked it, so I guess that's fair. The reason I'm explaining it to you this way is so you begin to understand that it does not matter how many buy orders are at this low or at that low or at this low or at the down candle or at the whatever the fuck. Oh, mitigation here, right? Like something like that. It does not matter how many orders. You could have George Soros coming in there with a million bazillion contracts to long gold at fucking 35 or 33.56. It does not matter. Okay? So now, what happens here? What did we discuss yesterday? In relation to the mitigation, what typically manipulates will typically mitigate. Because at this point, smart money traders, interbank traders, okay, that's what a lot of educators don't talk about. Smart money is not like JP Morgan Chase. I know I did say that for a long time. They kind of can be, but what I'm referring to is the interbank traders. People you'll never meet. The men in suits or the women in suits. The boogeymen. When this occurs, if they are in any longs, now they get the opportunity to get out. Or if they're short, now they have an opportunity to stack shorts. Okay? And if you look closely, right, because again, some people still don't believe that this shit is all coded, that there's no algorithm, right? There's no algorithm, John. There's no algorithm. That's all, you know, fuckery. That's all bullshit. Yet we have a small gap right here resting inside this mitigation, and that's exactly where price stops on a dime. 33.69.8. Really? So there's no algorithm, right? There's no algorithm. We immediately come off of that, right? So what has taken place? Again, think about it, chat. This is just my interpretation of price. There are a lot of other people who agree, yes. But think about it. What has taken place? The market came down for sell-side price delivery. We came up to offer buy-side price delivery. Price could not get above Sunday's gap. We just ran some highs and shit the bed. There's a small imbalance right here. we're starting to print gaps in the direction of these lows. We're trading and basically closing in the direction of those lows. All signs point to the lows. Then we get our mitigation right here, and then we slam lower. So now what can you expect? This is going to be the final move now. This is the last move. The second stage of distribution, right? Did you catch that? Original consolidation. And again, I know that's kind of a large range, okay? I don't make the rules here. Or remember AMD from last week? Accumulation, manipulation, right? So what comes after accumulation, manipulation? Distribution, right? So what can you expect? Big down candles coming. Big down candles coming. Boom. There's one, there's one, there's one. Then we get, well, that's a little bit of an extension, but we do get an extension lower here, right? Now, why would that be the case? Well, think about these lows, right? How far can price go below a low? Oh, I don't know, John. Maybe another set of lows, maybe a fucking imbalance. I don't know, man. We got to look. Okay, well, no problem. Take a look then. What do we got? We got some lows right there. Those are kind of shitty. It's just a small set of lows. Is that gonna, should we sweep that and trade higher? Probably not. Probably not. And again, this is just the 15. We haven't gone on any other time frames. That's a low. We shouldn't sweep that. That's a gap we already traded into. Oh, well, what's down here? We got another set of lows. And then we also have an imbalance right here too. That's way down there though. That's way down there, right? Price could never do that. Oh, where did we stop and turn on a dime? Oh, that very imbalance right there below these lows. Boom. Magical. But it's not coded though, right? There's no algorithm that runs for stops. That's at 5 a.m. What's that? And 5:15. That's the 5 a.m. macro. Top of the hour. Oof. 7:30. That was probably news. And then 8:15. Let's see. 8:26, we run those lows. And then 8:35, we extend for that lower set of lows. Now, sure, we do end up trading back into the range. No problem. We get the continuation. And then we trade into that at 11:14. So just a little bit outside the 20-minute macro windows, but either way. So you're going to tell me price is not coded, yet we have that gap right there inside the mitigation, and then we have this imbalance below the lows. And yet that was responsive, and that was responsive. But it's not coded. And there's no algorithm. And I don't know what the fuck I'm talking about. It's that simple. When nothing, okay? When nothing stands in the way, meaning I already walked you through price. Are we going to sweep lows and then trade higher? Why the fuck would we do that? Is there some down candles or some other concepts we're going along? Why would we do that? We've already gotten a bunch of evidence that we are heavy short. Not we're short, but that price is very bearish. It's extremely bearish, right? So there was that 7:30 news that just so happened to trade just to a gap inside of an imbalance. We trade lower, we rallied, and then you see the bearish order flow in here. 1 minute time frame. Oops. Right, 1 minute time frame. What do we got in here? Well, to be fair, we have a short-term high that gets taken. We trade lower. Those three up candles put together, right? If the market is bearish, up candles should be respected. Do we have that? Yep. Right there. See that? Then we trade lower, small imbalance, and then lower for the lower set of lows. Okay? So even though, and we got a lot of markups now, I know, but even though it seems late in the move, you're short in a discount, yes. It's the second stage of distribution. It's the second leg of distribution. Original consolidation, manipulation, low risk short, first leg, second leg. I'll say that one more time because I know some of you probably missed that. And I'm a little bit zoomed out. Okay. I'll do this again. We'll do it slowly so everybody can follow along. All right. Original consolidation. We have some highs here. They got cleared. So there's your manipulation portion right there. Right? We have a higher high above highs. That's a soup. That is turtle soup right there. Again, this is just my view. That's my view. Some people may not, oh, that's not a turtle soup. I don't give a fuck what you think. Okay? You can start a YouTube channel and you can tell people what you want. Okay? I'm telling people what I want. We really should use this in here, but if you want to mark that, I guess I probably wouldn't scold you for it. That's the low risk short. Soup, Y slime model. We trade lower, boom. That is the low risk short. From the target up to the high, we can fucking draw it correctly. We crossed 50% right there. So that to me was the first leg of distribution. We trade up into the mitigation, into that gap that's somewhere in here. I think it's right there. This becomes part of this second stage of distribution to run those lows. And like I said earlier, extend for anything that could be further. You see how easy that is? That is the main point I'm trying to tell you about. When the market is primed, it's going to give you evidence. Okay? I see this in young traders too. I used to do this a lot myself. A lot of traders think, oh, the market is taken off without me. No, it hasn't. Has it taken off? Oh, yeah, sure. If you're not short above Sunday's gap, you're not short. If you're not short above the highs or close to it, that's okay. It's just now crossing 50%. In a market maker sell model, it's going to trade back above 50% most of the time. It's going to give you a chance to short. Because remember, what manipulates typically mitigates. That's your opportunity. When smart money is getting out of longs because now they understand, okay, we're fucked if we're holding on to longs. So we need to get out of longs. That's why it's coded to do that. It's not coded to give you an opportunity or little Johnny from down the street. The algorithm is not built for you. It's not built for me. It's built for the interbank traders. It's built for the real smart money traders. All you have to do is get in sync with that. That's it. That's all you got to do. Best trade you'll ever take is getting in sync with price delivery. You're getting in sync with the sell program, or if this were, let's say, yesterday's case, you would be getting in sync with a buy program. What did we go over yesterday? Specifically on NQ. I told you what? I told you this isn't bearish. There's nothing over here that's going to send price lower. Now, I did also tell you, given the time of day, we might fizzle out into the close, right? We might trade lower and fizzle out into the close. Oh, we did that too. Oh man, he just keeps getting so fucking lucky with this shit, bro. He's just always right. I told you, nothing in that is bearish. Nothing in that is bearish. And I said, if we're going to trade higher, it's going to run that high, and then it's probably going to run that one too. And guess what? What the fuck happened in the after hours? What happened in Asia? We got a nice, beautiful Corvette candle higher. I told you that was likely coming. I fucking told you in the live stream. That ain't bearish. That ain't bearish. Right? Yes, we got a retracement. No fucking problem. What is this right here? We got some lows, cleared that out. That becomes a mitigation. Oh, so we traded into a concept you already know about, trading in the direction that I gave you, right? And a lot of people were caught off guard. What are you caught off guard for? I fucking told you that was coming. It's because you don't fucking listen. You don't listen. Oh, what happened? What happened? What happened? What do you mean what happened? Market did what we thought it was going to do. Why are you surprised? Seriously, what is the surprise? Are you surprised on Christmas morning when there's presents under the tree? No, because there's always Christmas presents under the tree on December 25th. Are you surprised when the sun comes up in the fucking morning? Why would you be surprised? It comes up every morning. Unless it's cloudy, but you guys get what I'm saying. This stuff repeats. Why are you shocked? You're not. Not here, at least. And Aziz, I have no idea, bro. I have no idea. But anyway, my point was, is I told you that yesterday. If we could get above these highs, no problem. But there's nothing stopping that. So we should continue. And that's exactly what we did. And then look at today. We even continued overnight. How difficult is that? It's not difficult. Okay? Because we're still in electronic. We actually never went to regular trading hours either. Some low resistance highs there. But that's the point. Okay? If there's nothing bearish about that, it's probably going to continue being bullish. It's that simple. So guess what? How do you know when to hold trades? I just gave it to you. How do you know when to hold a runner? I just gave it to you. If there's no evidence it's going to reverse, hold that bitch. Bro, I still have the triple Qs from like two, maybe 3 years ago. 3 fucking years ago. I still have JP Morgan from 133. Because there's nothing stopping it from going lower. And it's just going to print higher and higher and higher. And that's how you take mega trades too. You got to hold them bitches. Silver, we bought years ago. She's almost at 40. I think she's actually pulling back today and yesterday. No problem. Is there anything bearish about that? No. What is bearish about anything in here? Now, mind you, earlier this year, back in April, yeah, we did have some economic fuckery, but what did we come down for? Some lows. Right there. What about this imbalance? Is that bearish? No. Well, if it ain't bearish, what's it going to be? Bullish. Boom. Wow. Real hard. Frame a one-sided market. When you can frame a one-sided market, that is high probability trading. I don't give a fucking rat's ass if you think it's late in the range. I don't care. Because that is a you problem. That's your ego. The same way it was mine. Man, if I can't get in below the low, I'm missing out. Well, you're missing out on money, you fucking retard. Why would you do that? You know what I mean? Let's go back to gold for a second. You missed the low risk short, so you're not going to take the mitigation, which is also the 25% level, by the way. Nice little lazy trader model there. You're telling me you couldn't get the low risk short, so you're not going to take the mitigation? You're an absolute idiot. You're stupid. Okay? Because why? I used to be the same way. That's how I know. I used to do that all the time, and I missed out on so much. I don't even want to talk about how much money I missed out on, bro. It would be, I would throw up, okay? If I went back and calculated, like, oh, I should have taken that, and I didn't, this, that, and the third, trading NQ or even gold contracts, I don't want to talk about it. You don't have to get the best entry. And I know that sounds crazy, but John, you showed the best entries. They ain't always the best, baby. Sometimes they're a little bit late. And that's okay. Shorting above old highs, low risk short, mitigation, late order flow. There was at least 4 opportunities at a minimum to go short below the lows. At least 4. Pick one. Doesn't have to be the earliest. It can also be a little bit later. That's okay. Aziz, I don't even know what that is. You'll have to ask whoever you learned that from. What about taking profits when the market provides theory? Libra, I'm not sure what you mean by that. I'm not sure what you mean by that. If I was short from that mitigation, when whatever low we made prior to that, that would be my first partial. And then the second partial would be the lows like -1 or 2. And if I had more contracts, I would hold either for those lows or, like I said earlier, that imbalance way down there. But I typically try not to catch, smack a fucking home run. I don't need home runs. I'll take a first base hit and like a second or third base hit, based on liquidity. I'm fine with that. Catching a good move, right? That's what you need. You don't need the entire move. You just need good moves. Because good moves consistently compound. And to me, it's easier to hit singles and doubles, maybe even triples, versus trying to just get home runs. Aziz, it doesn't matter. I use every time frame. Except I usually don't do anything odd, like a 3-minute. 5 minutes, fine. 3-minute can piss off. I don't like the 3-minute. 1 minute, sometimes 2, 5, 15, 1 hour, daily, weekly, monthly, quarterly, yearly. I don't do the 6 month. Sometimes the yearly and the quarterly, but that's it. The time I spend the most on is probably going to be the 1 minute. Or the triple screen, where I'll have the 1 minute and the 5 and the 15 or something, like split. I'll do that too. All right. So I guess we got like 10 minutes left, so I guess I'll cover one more thing and then we'll hop off of here. Although I do want to, yeah, see, we got a soup right there. We got a lower low below some old lows. So lower day might be in, but our target for the upside is what? Today reminds me of yesterday, where the morning session was fucking awesome and the PM session is butt. The PM session's been cheeks. Aziz, there's nothing wrong with 1 minute and 5 minute. They're both fine. Don't be sucked into this idea that the 1 minute time frame sucks. Okay? Anyone who can't trade a 1 minute can't trade a 15 minute either. I fully believe that. You can't trade a 1 minute, you can't trade a 5 minute, you can't trade a 15, you just can't trade at all. Because price is fractal. So it makes no sense. You can trade one time frame but not another. That makes absolutely no sense. You can drive a Hyundai, but you can't drive a Toyota. Why? They both have gas pedals. They both have brakes. What do you mean? If you can drive one, you can drive another. Makes no sense. The consistency you seek, as Mark Douglas said, is not in the market, it's in your mind, brother. If you think it's inconsistent, it will be. If you believe it is consistent, then it will be. And I don't know, Julius, that's up to you. I personally don't think it matters what demo account you use, or even TradingView paper. I think a lot of people overvalue, or they put too much emphasis on what broker to use versus learning how price works. Now, a broker will make a difference, don't get me wrong, but if you know what you're doing with price, trading with a broker or a certain prop firm will not matter as much as people think it does. Personally. You got to stop looking for ways to avoid responsibility. You have to learn how to trade. If you don't know how to trade, then it won't matter what broker you use. If you're shorting bullish markets, you're going to get raped on every broker you use. So, sorry for my language. I know some people might not like that, but it's just true. It's just true. You're going to get bodied no matter what happens if you're on the wrong side. All right. Sorry, this will be the last thing. I was trying to get to something. I was trying to make a point about something. And now I don't remember what it was. What were we talking about earlier, bro? Man, fuck. I thought I was gonna end it on a really good idea, and I don't have it anymore. It slipped my mind. Amit, that's a great question. They asked, if you started from scratch, what's your way of study, practice? So I'm not a fan of hurry up and learn how to trade. I'm not a fan of that. But to answer your question, because I'm not an asshole, I try not to be. If I had to start from scratch, I would go through my personal heavy hitters playlist. I would go through the 48 laws. Okay? I'd go through the 48 laws multiple times. I'd watch it at least, I would say, at a minimum once per week. Because there's 48 ideas. There's a lot. Okay? It's divided into 3 parts. Technical analysis, the first 16. The second 16 is risk management. And the last 16 are mindset. Because that's the successful traders trio. You need all 3. I'd go through the 48 laws video. I would go through the market maker models masterclass. I would focus on market maker models. I would become so immersed in market maker models that everything would be like a market maker model to me. You know what I mean? Like, I would just pull up to the red light and be like, I wonder, how many seconds we have until the light turns green. I wonder what they coded it with. You know what I mean? And you start sort of thinking like a programmer in a way. And I would just say, these things are built on purpose. You know what I mean? And I would just focus on that. Okay, do we have the manipulation? Do we have the original consolidation? Da, da, da. I would just study the absolute fuck out of that. 48 laws, market maker models masterclass, and the final one would be the mindset masterclass. Because the mindset masterclass touches really, I think, a little bit more in-depthly on the mindset stuff. Because guess what? You are going to get frustrated. You are going to take trades that don't work out. And you're not going to understand, well, what happened? What did I miss? You are going to try and over leverage, thinking that, oh, well, he says not to manage or not to over leverage. But, I'm special, John. I'm different. I'm built different. I'm alpha, John. Right? So you're going to size up, and then you're going to size up on the wrong trade, and you're going to get burned. You need, it's not a safety net, but you need those ideas behind you. Whispering, don't over leverage. Hey, you know what? You may have taken a loss, but it's not the end. You still haven't blown that account. You still haven't lost that combine. It's okay. Learn from it, but go on to the next one. You know what I mean? And to kind of like keep encouraging yourself to move forward. That's what I would do. Okay? Now, admit that is not a green light from me to say, John's going to teach me how to trade in 6 hours, right? With 3 2-hour videos or whatever the length is, right? That I didn't say that at all. I just said if I had to start over, because you asked that, I would go right into market maker models and the 48 laws video and the mindset masterclass. That's why I made the heavy hitters playlist. Yeah, Aziz, I don't use fibs like that. That's a lazy way of looking at fair value gaps. That's the TikTok way of trading. And that's why those TikTok traders Don't do well. Smart money concepts in 5 minutes or less. Okay, well then why are your followers getting their ass blown out by the market? Trading your golden ratio fair value gap and they get wrecked. You think you're picking the right one, but you're trying to take a shortcut and that doesn't fucking work. Doesn't work. That'll be the last question for today, Aziz. Does it look like I have any indicators on here? Does it look like there's any indicators other than some lines? Nope. Time, price, and context is all you need. The law of high probability. It's not that the fair value gap is trash. I call them imbalances. They're not trash. It's just you have to know how to use it. And trying to marry it with a fib tool or like premium discount, that ain't gonna work. You think it's that simple. It's not. It's not that simple. Okay? So with that being said, that wraps up for today. All right? So, in overview, we talked a lot about gold, actually. We spent quite a lot of time here, but we talked about accumulation, manipulation, distribution, right? AMD, I've already taught you that. There is a free YouTube video. It's one of my most recent releases. It's a very simple idea. I've taught it for, I don't know how many years now. Accumulation, manipulation, distribution. So we talked about AMD. We talked about a market maker sell model. We talked about premium and discount. We talked about mitigation. We talked about gaps. We talked about manipulation, low risk shorts, first leg, second leg of distribution. We talked about Sunday's gap. We talked about the difference between a gap and an imbalance, because there's a lot of people out there that still don't fucking know the difference. We talked about, we didn't really do top-down analysis. I can't say that. We talked about how up candles and bearish markets should hold, right? That's one of the I guess confirmations of bearish order flow. We talked a little bit about patience as well, right? Waiting for the manipulation, if you'd like, to then, or wait for an overwhelming amount of evidence pointing in one direction, right? For high probability trades. You don't need the big trades as much as people think. You don't need the big trades. You just need good trades. And that's where a lot of people fuck up. You think you need to skyrocket your account. I need to make 10% a day. No, you don't. You don't. Now, 10% a month, maybe I could see. Trying to get 2.5% as a goal per week, I could see that. That's more realistic to me. Okay, John, I'm aiming for 2% a week. I would be fine with that. I like that. Okay, anything above 5%, I think you're going to be pushing it or over leveraging to get it. And I don't believe in that. All right. But anyways, that's the recap. That's what we talked about today. For those of you that showed up late, you're more than welcome to rewatch the stream. They're always recorded. I live stream here 4 times a week, Monday, Tuesday, Wednesday, and Friday at this time 1 hour ago for you. So for me, that is 1 p.m. Eastern. Okay? You don't ever have to become a member. You don't ever have to join us in the Discord, even though I give out, free money with ideas, but you don't have to do that. All right? So if you want to join us again tomorrow, we'll be here, same time, same place. All right? On Wednesday, the 16th. Y'all be good. Don't do anything stupid. I'll see you tomorrow.
ain't coming this off, get it hard fried. I just can't do what's up with the frog guys. Got that F candy, don't put the mob tie. Pop the block and your throw the block away. Beat the cages like I keep it animate. I don't get shit over pussy ass nigga, but why shit in yellow tape? I don't get shit over pussy ass nigga, but niggas and how to tip. I just put monkey nuts on my top of stick. Might just knock off an arm when that chopper hit. From my cousin the back and he loves a brick. Cause that nigga all cocky and nagging bitch. Down my house and my whip in your kitchen is drip on my neck and my wrist off that powder shit. Beans fully automatic. Chopper fully automatic. She gon' send me off as automatic. You can wipe the hoe cause I done had it. And I ain't never had an OG, multiple old head niggas rabbit. Carolina Park cane train, I'm the big Lord Bunny Rabbit. Beans fully automatic. Chopper fully automatic. She gon' suck me off as automatic. You can wipe the hoe cause I done had it. And I ain't never had an OG, multiple old head niggas rabbit. All the young niggas know me and the gang got it tatted. Gang got it tatted. Sitting there and got it tatted. Yeah, yo, got me fucking with the matic, spinning racks, cracking, spinning plastic. Sent your bitch to shopping under 7-hour flight, the hoe ain't bring no back. Streets, we got a heat seeker, push a pussy nigga off the planet on top. Show you niggas how to rob. I can shoot a nigga in the face and make a pop. Knock him out of Louboutin. Over 500 degrees when I cook a nigga. For police, I go on the run, but I just let them book a nigga. Got that GGR report out the garage on you pussy nigga. Beans fully automatic. Chopper fully automatic. She gon' suck me